Thank you very much. Since this is an exam day, commencement day lecture, we are going to mix the problems of poverty with the problems of trade as well. Let's see how the cocktail works. But let me start with Professor Banerjee with what surprised you. In spite of all those 5 problems that you explained, India is growing at 7%. Do you think we can manage that for some time now, or before we hit the Brazilian wall?
So I think so. I don't know why I think so, because I don't think anybody actually, we're kind of an uncharted space, because we're given all the problems that people are happy to point out. We've been growing, but these problems have been with us for a long time, and we've been growing. So I don't know that we know. Now, let me say one thing that maybe calibrates this a bit, which is that if you look at China at our per capita income, it was growing as twice as fast. So China grows slower than us now, but in 2004 to 2008, when it was roughly like us, it was growing 12 to 14% a year. So I don't know that we are not maximizing necessarily where we could be.
Yeah, I guess many economists will agree that we are nowhere near potential, however potential growth is measured. But I take your point, neither we are not growing anywhere near our aspiration or our potential. But what's your sense about that, Mr. Raskina? Do you see growth as meeting any hurdles this year, or does it look like we'll chug along?
See, I think at least where the external sector is concerned, which is Exim Bank's primary focus, you're up against a number of headwinds in the world. From a demand point of view, if you look before the global crisis, your elasticity was way more than 1. For every 1% growth in world economic growth, your trade was growing almost by 3. It's exactly the opposite now, or just about identity. So you're already facing headwinds in the world. How do you grow your export sector when there is a decrease in aggregate demand in the world around you? Secondly, our own economy is growing faster. If you go back maybe to the start of the decade, the international orientation, exports and imports as a percentage of GDP was about 47 or 48%. It's down to barely 30% now. So your domestic economy is growing much faster than the global economy is growing. Naturally, your exports are not keeping pace.
Mr. Malik, what's your best guess of the economy? I know that your expertise in Exim Bank is in trade and export issues, but you guys deal with people who are coming to you for loans, and you're looking at the real economy in India as well. Does it look like we will do better than last year in terms of growth, or even as good as last year, which is still 7.3%?
See, the last figures show we have grown at 7.2%, but the last 2 quarters, third quarter and the estimates for fourth quarter, shows a slowdown.
Yes, 6.8.
Now, I really don't know whether this slowdown is a long-term trend or the first half growth is a long-term trend. But looking at what is happening actually on our desks, we are yet to see a huge pickup in investment as yet. And that is primarily because the capacity utilization across most of the major industries have not yet happened to any significant level where it warrants further investment. So whatever little investment we have been having of late is mostly coming through the public sector, or attempts being made through the public sector, and maybe some replacement demand. But real greenfield or real expansion in a major stage has not yet happened. This, with inequality and poverty rising, may still pose quite some challenge.
Just to complete the growth argument, Professor Banerjee, how would you look at 2019? There seems to be a handshake on trade between US and China. Does that mean that 2019, the global economy will not be as bad? Well, the World Bank has just forecast that it may be a shade slower in 2019.
I mean, to be honest, I think that in terms of the bigger worry is a China slowdown and a US slowdown than the trade policy dispute. Because, I mean, neither of these economies are massive traders. They don't trade, as a fraction of GDP, they trade less than us. So this will create some unhappiness, but for the domestic, the real force of change is China slowing down for reasons which don't have that much to do with the US. It was slowing down before Trump, and it will continue to slow down a little bit. And that, I think, is a bigger concern for the global economy, since these are some of the biggest drivers of the global economy.
Okay. Well, then that puts yet another obstacle, perhaps, for India in 2019. We could have, of course, political change as well, which could slow down things during elections. Usually, people take time to take capex decisions. So we could have a natural slowdown, even if consumption picks up because of the expenditure involved. But that brings me actually to the election itself and the amount of poll packages that are being thrown around. Before I come to that, Professor Banerjee, you spoke about agrarian slowdown and the fact that we are using agrarians, we are depressing prices of farm products to achieve inflation targeting. I want to bring up the general question of inflation targeting itself, and I'm not very sure whether the hike in interest rates which was used to bring down inflation actually hurt farmers at all. Is it related? Is inflation targeting creating the problem?
I am not sure it was I can't say for sure, but I think the bigger impact is simply the price policies. We don't have free trade in agriculture. We ban exports willingly, and willy-nilly exports are banned. Whenever we feel like we want prices to be lower, we ban exports. We actually imported dal in 2016 when we had a surplus of dal. We're not really, there's no such thing.
Are they idiosyncratic, or are they, were any of these policies taken because of an inflation targeting regime, or absolute callousness and lack of planning?
It's a good question. I don't know the answer. My guess is that the idea of keeping agricultural food prices down was key in these decisions. Whether this was thought through and is going to give us 4% inflation or not, I don't know. But I think keeping price stability for the consumer has been a primary goal of the policy we have adopted towards agriculture.
Okay, and now I don't know how to order the questions, but I want to come back to this agrarian problem that quite clearly is there, and I'm not able to link it so much to inflation targeting. Inflation targeting is one of the institutions that we have put in the last 2 or 3 years with a monetary policy committee, which is somewhat kept at arm's length from the powers that be. What's your sense, Mr. Raskina? Should we abandon the experiment so early?
No, I think if you're going to have an experiment, you've got to give it a fair chance to prove itself. If you go by the pure guidelines given to the Monetary Policy Committee, it was to hold inflation at 4% with a band of 2% either way. Well, they've succeeded. They're very much within the band. The issue is now, was that an outcome of policy? Did it happen as happenstance, or was it in spite of policy? You still don't have the evidence. It's too early. But based on what they have achieved, they've done everything that you asked them to do. It would be pretty unfair then to disband it at this point of time without giving them a longer rope.
Okay. But, on that issue, Professor Banerjee, have we studied enough the connection between demonetization and the collapse of farm prices? Are we pinning the blame for the disaster in farms on the wrong institution?
So we looked at the farm price, and you do see an impact immediately, actually. You see it in the next quarter, and you see mandi prices going down. I think that it's clear that that's what happened, but I don't think...
You mean between demonetization and farm prices?
If you look at what happens right after demonetization, places that are closer to the Reserve Bank has these money centers, basically. Places which are closer to money centers get more cash, and they seem to have higher prices. So I do think that there is evidence. I think there's a bunch of people who have looked at different ways, and I think there's evidence that demonetization hurt. My point about inflation targeting was not so much that it is necessarily, not so much that we should abandon inflation targeting, but that when we do policies which hurt specific groups predictably, like, for example, importing when there is a large amount available, we need to compensate them. And if we don't compensate them, they're going to be angry. And it doesn't. And my point wasn't at all that we should abandon the experiment, but that we need to think of, if we're going to be in this world where we are going to impose costs on people, large costs on people, then we need to also find ways to compensate them.
Fair point, sir. I mean, the MSP system, which was supposed to at least compensate some of them, works for 2 crops in 5 states. And that is the former chairman of the Agricultural Prices Commission statement, his observation. So clearly, that mechanism which should have ironed out and been a support price for the farmer is not working at all. And therefore, it's better to make that work rather than perhaps abandon an experiment. But can you hold forth a little more on the connection between demonetization and the problem that we have seen in crops? What is the research done at all?
But this is I think that this doesn't tell you anything about what happened in 2018, where we have even lots of distress. This is just basically the end of 2016 and the beginning of 2017, when you see it and you don't see it afterwards. Okay. So it goes away pretty fast. Okay. I mean,
so it can't explain the farm distress
it cannot explain
for the next year.
The 2017 Kharif season, where you see distress, cannot be explained by demonetization. So I don't think it's demonetization that's driving. 1 year later, the cash is back. We know that the cash came back pretty fast. The mandis were back operating at normal prices. It's hard to see anything after that. The effect is there, but it goes away pretty fast. Okay. So I don't think that that's what's going on.
Okay, so there is something else that has clearly, yes, Mr. Raskila. How would you, what is your diagnosis of this, clearly nationwide eruption of farmer distress?
I think you need to look back at policy, and that's the point Professor Banerjee made in his address also. If you take a look at government policy regarding export or import of agricultural products, Professor Banerjee just now mentioned dal. Now, you had to import pulses because you had agreements in place with a number of African countries and Myanmar, and the government of India cannot break a commitment which is made to them from the foreign policy as well as from the moral angle. But historically, we've used government policy. If the price of commodity X is shooting up in the market, there are complaints, especially from the middle class, put a ban on the exports. What is that going to do to the farmer? It's going to drive down his income. So we've done this for onions, we've done this for grains, we've done it for I don't know how many other issues. The good news is evidently the government is seized of the matter. Last month in December, the Commerce Ministry took a new agriculture export policy through the cabinet. Now that says for 2 items, processed food items and organic food items, these will be exempt from these kind of special restrictions and be allowed to be exported or imported freely, irrespective of the domestic price situation. It's not the full solution, because obviously processed foods and organic is just a small part, but it's a big step towards solving the problem. And if we can then get the courage to move the next step, it could handle this.
Professor Banerjee, do you think that, a farm surplus is also because there is a limit up to which agriculture can go on? I mean, in India, for instance, I think agriculture is growing at about 3% per annum, and now population growth has dipped to about 1% or 0.9% per annum. So you would hit saturation limits. Are we not recognizing that problem? Is that also a middle income problem?
Productivity in agriculture is extremely low. I don't think we're in any place where we are hitting any constraints, and we are seeing lots of exit from agriculture. Do you see people who say they are farmers? We look at what fraction of the income comes from agriculture. It's 20%. So people have understood. So you are getting a lot of reverse tenancy. People are letting their land to bigger farmers. We need to create a regulatory structure within which people are able to give their land to whoever is the best user, which we don't have. Right now, nobody really can give their land on a 5-year lease.
A legislative constraint then?
Yes. Well, for sure, we need some way of doing that, which both protects the interests of the farmers and the small farmers and lets the land market work better. So land market doesn't really work, so land doesn't get reallocated to the best use. I think that our productivity could grow a lot if we did that. And little bits of that happened, like Gujarat under Mr. Modi's, there was very fast growth in agriculture, globally fast growth in agriculture. So we can have 7% growth in agriculture. It's not impossible.
Yes, Madhya Pradesh also did that under
exactly.
Mr. Chauhan.
Yeah.
But Mr. Malik, would you want to add anything to India's ability to emerge as an agricultural exporter? Is that something which, I mean, we are talking about surpluses in vegetables, in grains. We have definitely used imports well for the consumer, to the distress of the farmer. Now is it time to use trade to help the farmer, which we probably have not explored at all. We've always treated ourselves as a domestic economy when it comes to agriculture.
Yeah, that would be an interesting turn to take for our agriculture. There is no doubt about it. Except that so far as the international trade regulations are concerned, we should have space to actually fit in our policies. A more important thing perhaps would be at certain places, our phytosanitary conditions would actually put a restriction on our agricultural exports. And you have the example readily of mango and all not being allowed to penetrate certain markets. So until and unless we do that, I think it would be quite a big of challenge. So one side we have to improve our quality, the other side we have to improve our perception. So once these two things are done, yes, agricultural exports can be a major thing.
So we hit the competitiveness barrier much earlier in agriculture than perhaps we are doing in manufactured goods. Okay, that's an area to explore, which perhaps government policy will take some time. Now we come to the meat of the discussion. We are not just meeting in a time of competitive trade barriers, we're also meeting it at a time of competitive poll promises. Which is almost looking like a race to the bottom at this point in time. Professor Banerjee, do you think this is heading towards a fiscal disaster?
No, I mean, I think that it's heading towards what we've always done, which is we're going to have an electoral cycle. We've had this before. We had loan waivers before 2009, I think.
Isn't it a new high?
I don't know.
Not just loan waivers. I mean, the competitive promises we've now, I mean, it's not yet been announced, but the buzz is very loud that there will be a universal basic income. We are not talking of farm packages of 20,000-30,000 crores anymore. We are talking about 2 lakh crore to 4 lakh crore. Hence my question, that is this a new high in fiscal disaster?
I mean, remember, in principle, we also make much bigger commitments in other programs, and then we find ways to not implement them. I mean, we're very good at, and there's an explicit agenda, which is that we say it's universal, then we will not give it to people. So I don't want to be.
So you're betting on the.
I'm betting on the fact that they'll manage to not deliver, and that's how they've done every program. If you want to restrict NREGS spending, you just don't approve of funding, and then it doesn't happen. I think it's on all of this idea that you will have zero balance accounts and everything will be automatic, then somehow gets undermined.
I'll just come back to with what is a viable package, since we are talking poor economics. But basically, since both of you are bankers and would worry about the cost of money, are you worried that we've already bottomed out if you're only taking the 10-year bond from 7.2 to close to 7.5? Do you think we are heading into the promise? The vote on account has not yet been presented. It is possible that the pre-poll package will be presented either in the vote on account or maybe even earlier. We don't know. But clearly, it looks like it's going to be presented to us in the next 3 weeks or next 2 weeks. Mr. Raskina, as a banker, the stock markets will react to it late. The bond markets and the currency markets will react first. What's your worry, since you are primarily a treasurer?
No, I'm not primarily a treasurer.
Well, you were a treasurer for a long time.
Well, yes. I think we're probably not giving the government enough credit on this. Yes, poll promises are there. They're part of a democracy. They're part of any democracy anywhere in the world. But if you look at this government, they've been pretty effective in keeping their word on the fiscal deficit for all the past 4 to 5 years. Even now, the finance minister has gone on record that he is absolutely confident of holding the 3.2% of GDP, despite the bit of a slowdown which has happened. The vote on account, I think the budget session starts on the 31st of January.
And the vote on account is on February 1st, that's announced.
Right. Now, the vote on account cannot have new policy measures. It can only have holding on operations. Even if you had very dramatic policy measures, which I doubt, the elections have to happen before May. There simply isn't enough time for the vote on account to be passed, money to be disbursed, schemes to be implemented before the polls. So I think it's going to be announcements rather than something to worry the bond market.
Yeah, but bond markets will discount what they see 9 months down the line or 6 months down the line. Mr. Malik, would you worry that the cost of capital is about to rise?
See, I would definitely worry because as a banker and also for some time being involved in the capital market, bond market, etc., this would definitely send, what should I say, shivers down the spine of everyone who is doing bond trading and all. But really speaking, madam, if you look at it, the way things are going, and I don't mean only India, worldwide, jobs not being created, etc., I think universal basic income, transfer of money in some form or the other has to be done. There's just no way out. Whether it's India or Bangladesh or even Europe for that matter, this has to be done. This is coming as a reality. So I think what would be necessary is to have some method whereby we can deliver it more efficiently, some method whereby it can actually be synchronized in a manner where it is done. Universal basic income and all will come. But one thing I would like to add in this connection, 5 years back or 6 years back, when we were talking of NREGA not being the best of schemes or guaranteed food program not being best of schemes and creating hallucinations about out of control fiscal deficit and all. But on the other hand, basically these two were the schemes which helped sustain rural development for a significantly long period of time and which actually gave a push to industries and when the urban sector was not working, and you had a lot of tax collections possible primarily because of rural demand, which was upset. So essentially you take it when government is not in a position to increase investment or when investment actually is not happening, this is basically a way to impinge consumption-driven growth.
Stimulus.
So that is there whereby tax collections could improve. So real impact on the fiscal, what we thought when NREGA was introduced or guaranteed food program was introduced was not as bad as it was thought to happen. Okay. Yes, stock markets and bond markets will rally negatively, but that's that.
So in fact, I think maybe that explains the sanguine behavior of the stock markets in spite of all the noise around polls. Thank you very much, Professor Banerjee, Mr. Raskina, and Mr. Malik. I enjoyed this conversation thoroughly. I hope all of you enjoyed as well. Thank you.